Howdy, Jacob here. Today we're looking at Crown Castle. They are in the specialized rights business. Similar to American Tower, they own, operate, and lease cell towers. They have 90,000 rope miles of fiber supporting small cells and fiber solutions across the United States. Okay, so like my American Tower video, I think these companies are very similar. I think that they definitely have pricing power, they definitely have some dominance, and I think there's a few places that you can tell that that's the case. So return on invested capital is pretty poor, but huge operating margin as high as 35% in the most recent year, huge gross margin of 70%, and pretty solid increase of revenue, almost doubling over the last 10 years. There is quite a bit of debt, though. We are looking at about 46 billion in market cap with 68 billion in enterprise value. Small increase of shares of the last couple years, but over the last 10 years, 100 million increase, about 30% or so of shares dilution. Balance sheet has 105 million cash on hand with 835 million short-term debt, 22 billion long-term debt. So we're looking at a lot of net debt here. That $22 billion in relation to free cash flow is over 10 years. So with most companies, I would be extraordinarily concerned by that. But because they have a dominance in this field, I think that, that might be fine. Their dividend pays out over 100% of free cash flow. So very first thing I'm doing there is cutting that in half. And what that's going to do, bring this down to about 1,300 in dividends versus their free cash flow, which actually is still way too high. So let's cut into three. We're looking at less than $1 billion. I think that's a bit more reasonable. And they've been buying back a little bit of shares, but not enough to offset stock-based compensation. So you're looking at about 120 mil dilution. So let's put that in our assumptions. And then outside of that, they make some acquisitions, but I do want them to be focusing a little bit more on debt. And so I will bring their growth down a little bit. I will say that with no or very little acquisitions and reinvestment, I still think they have pricing power. So I think 5 and 15 seem reasonable to me. I think that as for margins go, maybe 20 and 22%. And that should be all of our assumptions here. So again, I think that like American Tower, it's an extraordinary business. I think that the debt that Crown Castle has is something that I'm a bit concerned about. I don't think they'll be going away anytime soon because they really have kind of a biopoly in this industry. But I think that, a dividend paying out over 100% of free cash flow is not sustainable. That's why their debt keeps going up, because they're funding their dividends through free cash flow as well as issuing debt. And that just can't go on forever. So for me, I think the company's stock price needs to fall 64% to get to the return I'm looking for here. Again, fantastic company outside of the debt. I really think outside of the debt and how big this dividend payout is, I think everything else is fantastic. But I just am hesitant based on those two items. So either way, I hope you enjoy the video and have a great rest of your day. Thank you.